I'm going to talk about trader psychology today. I know what the market wants to do when crises hit, and I called that out, and I positioned myself accordingly. And if you look at the positions, they were extremely positioned well. But I didn't make money. And that's very frustrating. There are many reasons why. I want to share the story a little bit with you so you can understand the psychology that goes into trading in a changing market, a crisis market. And I took an oil call spread on the front month contract, and oil spiked. I was betting oil would go to 120, and I would have made thousands of dollars. Oil spiked to 100, and my position doubled overnight, and I took profits. And oil pulled back, and I felt like a king. Then the thing I didn't do was go back in to the position, still having a point of view that oil could get to 120. I took my profits and I got distracted. Oil went to 120. I missed out. I made money on this position, but I missed out on a lot. And that's basically saying, okay, I don't know exactly what's going to happen, so I doubled my money and greed took over and I got out. I didn't trade the plan. There's a reason why I have that sign. So the second position, I knew gold was going to go up, so I cleared out any call positions that I had, and I put on spreads to profit when gold would go up. And gold did go up, and my puts that I had made money, and then as it increased and it went through the first spread and I was up 1,000 on that, of the 2,500 I should have made on that, I essentially started layering in. And that's a professional move. You trade on the side of the direction because you know that the money will get exhausted at some point. And I started layering in and putting on call spreads. And all of this is in my point of view videos in the previous weeks. So there's not a happy ending to this, by the way. In the end, what happened is gold ended up rallying extremely hard, and it started to push through my second call position, which is great for me because those call spreads that I had were making money. They were profitable. The problem that existed was that my short calls that I used to fund those call spreads started to feel a little pressure from the market, which I expected that they would. That's the trade. What I didn't expect was the thought process. My brain started to think about wheat and how it just went lock limit up and locked me out. And all the panic and the fear in the market at the time that caused gold to go up by 72 points in one day started to weigh on my mind. What if I do make the $10,000 I was supposed to make on these call spreads, but then I lose it all and more because gold goes lock limit up for days and days? You know, these are insane thoughts to think that gold could go to 2,300 over the course of 2 or 3 days. Not really that insane whenever you see the activity of the parabolic move in gold, especially coming off of all the commodities that just blew out, especially wheat. So I thought that I would outsmart it, and I didn't trade the plan. I took off my call positions, thinking that the market was going to continue to go higher, even though it had already gone parabolic, and everybody knows that's usually a top. And instead of put those back on, I slept on that. And the market fell back hard. So I lost all of the opportunity that I had to make thousands of dollars there because I didn't trade the plan, because psychology got in the way. And so after it fell hard, I thought, I'm going to sell into this. And I started to sell puts further away from the market for the next contract. And I had one on the near-term contract. It kept falling. Why would it keep falling? Because it was already overextended. It had to come back. And so now I have to do battle on gold on the put side as well. And that wasn't part of the original plan, because the original plan was to profit on those naked calls. And if I had to stress about it, then I would at least profit as it was going through the call spreads. These are my favorite trades. But I immediately started to panic like everybody else, because if things go lock limit up, I have a video on that, by the way, but if things go lock limit up, you can't really do anything but take losses if you're short. Why am I saying this? Because the point of this video is that I am trying to convey all the years of knowledge. The knowledge that I'm bringing to you is pretty correct, except there's one thing: it's not just about direction. It's about direction, it's about psychology, which is what cost me money here, and it's about the fear in the market being baked in. And so when you have the direction right, but your psychology is wrong, you won't make money. You could lose money, even if you're right. I'm an example. But if you have the direction and the psychology right, the fear can also be baked in. And if you take a position on that, what fear baked into a market looks like is it looks like a casino. Now you're taking positions that used to be 2-to-1 trades in your favor, and they're about 45% to 55%. So you'll win $45 for every $100 that you risk. Can you, and if you're right about direction, then nice, but it's harder to make money, even if you're right. And the ability to lose money in these markets is extremely easy, because you have to be right about everything. There's no room for error. So what I did with my brother's small account, which I'm going to start trading very, very soon again, and you'll see those videos. Small accounts have restrictions larger accounts don't have. You can't take certain trades that make sense in these markets. So I just stopped trading. And that's what I would recommend, that when the market stops acting in a rational way, stop trading, put your money on the sideline, and just wait a little bit. You don't have to stop and wait until a bull market, but at least wait to see what blows up. Because even though you can be correct, there is no guarantee that you're going to make money, because everything goes in all different directions all the time. It's an explosion of emotion shown up in the candles and priced in. And so all the edge is usually squeezed out unless you're willing to gamble. I'm not. So I'll close it out by saying, protect your account first. Trade the plan second. That will protect you from psychology. And third, crises are very, very difficult to make money in. So if you're losing money right now, it's okay. Just pause your trading. Just wait. Just sit on the sidelines, take a breath for a week or two, and then get back in with a clear head. Lord knows that's what I'm going to do.